I'm Mary Lou Proudfoot for Investment Pitch Media. Thanks for joining us today. Mammoth Resources provided results from an additional 4 drill holes from its diamond drilling program at its Tenoriba gold-silver property located in the prolific Sierra Madre precious metal belt, Mexico. The company holds a 100% interest in the 5,333-hectare Teneriba gold property located in the Sierra Madre precious metal belt in southwestern Chihuahua State, Mexico. Subject to a 2% net smelter royalty purchasable for $1.5 million US anytime within 2 years from commencement of commercial production. A total of 27 holes were drilled for a total of 3,240 meters, with 4 holes released today. 13 were previously released, with results from the remaining 10 holes expected to be released in the coming weeks. The drill program is designed to test up to 5 target zones, which measure from hundreds of meters to over 1 kilometer in strike length, along a 4-kilometer east-west trend of gold-silver mineralization. The targets were identified in 3-dimensional modeling incorporating data from over 3,000 soil, chip, and channel samples, 26 prior diamond drill holes, geological and structural mapping, and the potential continuity at depth of surface mineralization as indicated by an IP-MAG geophysical survey. Today's 4 diamond drill holes were completed for a total of 321 meters, bringing the total reported to date to 2,235 meters in 17 holes. A summary of potentially economical intervals from these 4 drill holes are shown here. For more detailed information about these drill holes, please refer to today's news release. Today's drill results complement these drill intervals from the 13 previously released drill holes. Thomas Atkins, President and CEO of Mammoth Resources, has joined us to discuss today's news and the company's future plans. Welcome, Thomas.
Thank you, Mary Lou. I wanted to take the opportunity today to talk a little bit about our press release that went out on Wednesday, July the 13th. We announced some drill results, 4 additional holes from our 27-hole program. So that brings our total up to 17 of the 24 holes. And the highlight intersection in that was almost 90 meters of about half a gram of gold per ton, amongst other higher grade and some shorter intervals. But we've been doing really well in the drilling program. The idea was to follow up on some infill geophysics that we had from a prior phase of drilling back in 2017-18. And with these 27 drill holes, it was part of the first phase of a 2-phase program of trying to do 50 drill holes. We wanted to do the first roughly half of those holes, assess the results, and then follow up with a second phase, which we hope to be doing in the fall of this year. The results, we're very pleased with the results. They're very much what we would have hoped and expected. What in particular I want to emphasize is the volume that these holes help to represent. And I've got a couple of slides that I think help to illustrate that. The first slide, it shows the project area. This is a map that's in the press release. It's a map that we've been using with various additions of additional drill holes over the past couple of 2 or 3 press releases. And it shows a 4-kilometer trend. So each one of the squares that you see in this image is half a kilometer. And you can see the trend over 4 kilometers. It's open to the east and to the west still. And there are 3 project areas. In the west, Moreno, in the central area, Masuparia, and in the east, Canaritos. Now this Canaritos area, sorry, my accent, Canaritos, this Canaritos area, it measures about 1.4 by about 400 meters in size, which is, it's really, I mean, it's a very large size. And you can see, based on the drill hole locations, we're starting to infill this area. This area prior had only had 3 drill holes from a previous program. And so you can see these 3 areas and their size. And what I want to emphasize with the next slide, which highlights some of the results, is that we're getting results over tens of meters. In fact, this almost 90-meter interval is one of our longest intersections, although we did have an over 100-meter intersection in this same area in our 2017-18 drilling. And that, so we've got huge dimensions and somewhat modest grades, but the thing that's important about these grades is these are economic grades. Like, this is the thing I want to emphasize. Beyond size is also that the grade is economical. And I'll give you a couple of examples. The La India mine of Agnico Eagle in the same belt as our Tenoriba project, same high sulfidation type deposit. They're actually mining now economically, a multi-billion-dollar company like Agnico, mining about 0.65 gram per ton gold. Our weighted average grade of all of our drill holes currently is 0.66. So we're right in line with the grades that they're economically mining. Another company, a team of geologists and engineers, of which I worked with when I was president and CEO of Castle Gold, their Cerro Oro mine, they announced in mid-June a financing in place to purchase long lead time equipment and supplies. They're actually advancing a project that grades 0.41 gram per ton gold. So we're actually 60% higher than that grade. So the grades are economical. Mines are in production at these grades around the world. And the closest example is Agnico's La India mine. And you can see some of the highlights in intervals that we've reported to date on our drilling. We're actually hitting on 90% of the drill holes that we drill with these, tens of meter intervals of these potentially economic grades. And you can see some higher grade intervals in there as well. And that's what gives us this average 0.66 weighted grade. And then the final slide that I have here, it shows dimensions of these three other deposits that I've made some reference to. So the first one was the La India mine. The other one is Sazelle, which was owned by Glamis and then Goldcorp. It's now depleted, has been mined out. And the other one is Alamos Gold's Mulatos deposit. Now, these are also high sulfidation deposits in the same Sierra Madre belt as our Tenoriba project. And what this slide is illustrating is, if you look at the El Sazelle mine, this is the one in the orange tone, you'll see the dimensions of that mineralized footprint. So this is a sketch. Everything's at the same scale. They've all been adjusted to be at the same scale. And this shows the mineralized footprint of the Sazelle mine, which was a 1.8 million ounce deposit. Now, higher grade than what we're talking, but it's important to recognize that when they did that reserve calculation, they were looking at gold around $350 an ounce versus its current $1,750 to $1,800 an ounce. So that has a big impact on the grade that you choose. If you go down further, then you'll see with the green tone, that's the footprint of the La India mine of Agnico, which I made reference to. And you can see their reserve, it's almost 1 million ounces. The resource is actually over 1 million ounces. And their grade is comparable to what is the weighted average grade of our deposit. And then if you go further down, you'll see the Mulatos mine. They're almost 3 million ounces. Again, their reserve calculation in that $300, $350 an ounce range. And you can see the mineralized footprint of their 3 million ounces. So if you look at those and then you shift up the slide, and you'll see what are the boundaries of our Condoritos, Masoparia, and Moreno areas, you can see that the actual mineralized footprint that we're beginning to define with our drilling is substantially larger than these million to multi-million ounce deposits. Again, some at higher grade, but you can still see the scale of the area in which we're exploring, in which, as they say, we're getting good economic grades, tens of meters, up to 80 to 100 meter intervals in this area, and we're hitting on 90% of the holes that we drill with these kind of grades and intervals. So, very good success. And one other thing I want to point out, right now, we're just blocking out these areas. So when we drill and we get a good interval, we've already, before we even got the results, we've already moved on to 2 or 3 other drill holes. We're doing 50 is like the least, 80 up to 200, sometimes even 700 meter step outs from the prior drilling as we block out these areas. And again, hitting on 90% of the holes that we target and drill in the program. So yeah, things are going really well. I'm really pleased with the results. They're very much in line with what we expected. I mean, gosh, we took over 700 surface chip samples, so we had a pretty good understanding of the grade. We did a number of lengthy channel samples, and everything really is panning out very much like we expected. And we're moving towards, establishing our second phase of drilling, following up from this phase, which you hope to commence in the fall, whereby at that point in time, with another 25 or so drill holes with what we've got in this program, and then the historical 25 drill holes, we'll be approaching 80 to 100 drill holes. And we hope to be able to move the project to a maiden mineral resource. So I think that's a pretty good summary of what we're trying to achieve, what we've been trying to achieve in the program, and what we've demonstrated having achieved through this press releases and the ones prior. As far as future news, there are still another 10 drill holes to come out, and so those will be released over the next, I'm hoping maybe month to 5 or 6 weeks. We'll be publishing on our website a technical report summarizing the results of the drilling, our conclusions and recommendations for future work. And we hope to be moving to a small financing late summer, early fall, $1 million to $1.5 million to complete the follow-up 25 drill holes. Again, to move towards that maiden resource, we hope at some time following the conclusion of that program. So yeah, that's pretty much it in a nutshell. So yeah, I'm hoping that people will take a look at the company and consider an investment. I should tell you as well, our valuation, I mean, I know a lot of mining companies and especially exploration companies are pretty beat up these days, but our market cap, oh my goodness, is it's about a third of what's been spent on the property. So we're getting these good results, great potential as far as they're being economical, large scale, and yet our market cap is about a third of what's been spent on the property to date. The one thing that I always consider as I look at exploration success relative to cost is what kind of value am I creating with drill holes? And so when I look at some of our intervals, and I'm going back to our prior release in late April, we had 46.5 meters or around 0.5 gram of gold per ton. And I looked at that and I thought to myself, if I were calculating a resource, how far beyond that actual interval would I extend? And generally speaking, you go half the distance to the next drill hole and that. So I would be going, maybe 50 to 100 meters on either side of that drill hole. I would probably go in front and behind it, but I didn't do that. I was conservative. I just took it as a panel, even though it's not a panel. This isn't a vein deposit. It's a disseminated deposit over, in all directions. But I took that as a conservative measure, took that interval, and I looked at what would be the amount of gold that would be contained in the parameters around that hole. And at $1,800 an ounce of gold, I got a value of about $700,000. And the interesting part of that is that of that $700,000 value of gold represented by the parameters around that hole cost us about $35,000 to drill, including amortizing some, equipment and things of that sort. So when I can offer investors a 20 times investment return on the value created by a drill hole, that's the kind of stuff that I look at in these intervals and ask myself, should we be advancing this project? Should we be drilling these holes? And are we creating value for shareholders? And when I look at that, I get a clear answer to my question. Now, I said $700,000 on a 46.5 meter hole at about 0.5 gram. We've announced almost double that length in this other drill hole, so double that. And here's a hole that's creating perhaps 35 to 40 times the value of the actual investment in the drill hole. And that's something that I always look at when I try to assess whether, we should be advancing an exploration project and investing money. And, the answer clearly in this case is yes.
Thank you, Thomas. The shares are trading at 4 cents. For more information, please visit the company's website, mammothresources.ca. Contact Thomas Atkins, President and CEO, at 416-509-4326 or by email at tr_Atkins@rogers.com. I'm Mary Lou Proudfoot for Investment Pitch Media.